Hey people, what's going on? Welcome back to the channel. Hope you're well and in good health. Okay, let's dive in. So we're taking a look at a Guardian article about UK inflation. So it's saying here at the moment it's holding steady at 6.7% whilst fuel prices are increasing. So let's take a look what's going on here. So UK inflation unexpectedly held steady in September at 6.7% as soaring fuel costs offset the first monthly fall in food prices for 2 years to maintain pressure on households amid the cost of living crisis. The ONS said the annual inflation rate is measured by the Consumer Price Index remained unchanged from August's reading, raising questions over the Bank of England's next decision on interest rates in November. City economists had forecast a modest fall to 6.6%. Food and non-alcoholic drink prices fell by 0.2% on the month, the first monthly decline since September 2021, helped by the fierce competition among supermarkets driving down prices for milk, cheese and eggs, as well as mineral water, soft drinks and juices. Obviously, that will be good news for people in terms of basic staple groceries going down slightly in pricing. Now, it says here, however, price remains significantly higher than a year ago, and that's the issue because it's still higher than like 12 months back. So it's still going to be affecting people, particularly with this cost of living crisis. The cost of average food shop still up more than 12% on an annual basis, highlighting the pressure on households. The ONS said a surge in petrol and diesel prices contribute to almost all the upward pressure on the inflation rate, amid a sharp rise in global oil costs over recent months. Now, the Chancellor said, as we've seen across other G7 countries, inflation rarely falls in a straight line, but if we stick to our plan, then we will still expect to keep falling this year. Now, basically, he also goes on to say that the latest figures come amid expectations for a finely balanced decision on interest rates from the bank after its last month paused its most aggressive cycle of increase in decades. Financial markets expect the central bank to leave borrowing costs on hold at the next policy meeting next month. Now, despite remaining unchanged on the month, economists said inflation was still on track to fall below 5.1% by December. Obviously, that's massively still high in comparison to the target of 2%, which the government have been talking about in terms of economic interest rates and inflation pressures as well. So as it's still below the 6.9% rate of the Bank of England projected back in August, we still think that the bank won't raise interest rates again. So Dales, the chief UK economist at the consultancy Capital Economic, said the new risk to in events of the Middle East crisis at the moment restrain how far inflation falls next year. Concerns of the fallout from the Israel-Hamas conflict have pushed up the price of oil in recent days, raising the prospect of prolonged high prices for consumers at the pump. Now, last month's inflation rate is normally used by the government to increase the value of benefits in terms of the following April, i.e. next year. However, the Prime Minister has so far refused to commit, and speculation was considering a below inflation rise as the government grapples with tight public finances. As we know, with the potential recession on the horizon here in the UK and across the globe, with obviously wars happening around the world and lots of pressure there, a lot of things could happen in terms of an economic downturn. So for ministers to cast doubt on whether they will deliver this operating in full is unacceptable. Alfie Sterling, the chief economist of the Joseph Rowntree Foundation Poverty Charity, said millions of families need the certainty that benefit payments will begin to receive some of the significant real-term losses suffered over the past couple of years. And Treasury officials have discussed a one-off break from the pension triple lock. The formula guarantees a rise in line with September's inflation rate, average earnings of 2.5%, which is high. So it goes on to say, after wages rose by 8.5% in the year to July, partly influenced by one-off payments in the public sector, ministers are considering using a lower figure, tracking underlying pay to save £1 billion next year. Okay, people, please do let us know, is inflation affecting you? Is the cost of living crisis, the prices at the pump in terms of fuel, is that affecting you right now? Do let us know in the comment section below. Please support the channel by joining the channel. Support us on Patreon, link in the description. Don't forget to share and subscribe. Okay, people, catch you in the next one.